Hey everyone, and welcome back to the channel. With tax season just around the corner, I know many of you are starting to feel that little bit of stress. What's new this year? What do I need to look out for? Well, don't worry, because today we're going to break down everything you need to know about the recent U.S. tax changes for this filing season. We'll cover the key updates, how they affect you and your family, and I'll give you a clear, step-by-step guide to make filing your taxes as smooth as possible. So grab a coffee and let's dive in. First up, let's talk about the big picture, the standard deduction. For this tax year, the standard deduction has increased for all filing statuses to account for inflation. For single filers, it's now $13,850. For married couples filing jointly, it's $27,700. And for heads of household, it's $20,800. This is great news because it means you can deduct more from your taxable income right off the bat, potentially lowering your overall tax bill. Remember, you can either take the standard deduction or itemize your deductions. You'll want to choose whichever one is higher to save the most money. Now, let's move on to tax brackets. These have also been adjusted for inflation. This doesn't necessarily mean you're paying a lower tax rate, but it does mean you can earn a bit more before you get bumped into the next higher bracket. For example, the 12% tax bracket for single filers now extends up to $44,725 of taxable income, and for married couples filing jointly, it goes up to $89,450. It's always a good idea to know which bracket your income falls into to better understand your tax situation. One of the most talked about topics is always tax credits, and there are some important updates here. Let's start with the child tax credit. While the expanded version from a couple of years ago has expired, the credit is still a valuable one, worth up to $2,000 per qualifying child under 17. A portion of this, up to $1,600, is refundable, meaning you could get it back as a refund, even if you don't owe any taxes. Make sure you have the Social Security numbers for your kids ready when you file. Another key credit is the Earned Income Tax Credit, or EITC. This is a significant credit for low to moderate income, working individuals and families. The income limits and credit amounts have been adjusted for inflation. So even if you didn't qualify last year, it's worth checking again this year. The maximum credit you can receive varies based on your income and the number of children you have, but it can be a substantial financial boost. There are also some updates related to energy efficiency. If you made certain energy-efficient home improvements, like installing new windows, doors, or even a heat pump, you might be eligible for the energy-efficient home improvement credit. This credit has been enhanced and is now worth up to 30% of your costs. With an annual limit of $1,200 for most improvements, if you bought a new or used clean vehicle last year, you'll also want to look into the clean vehicle credits. The rules can be a bit complex, with requirements for the vehicle's manufacturing and your income, so be sure to read the fine print on the IRS website to see if you and your new ride qualify. Now, let's talk about some of the most common mistakes people make when filing their taxes so you can avoid them. The number one error is simple typos and math mistakes. Double-check your Social Security numbers, names, and all the figures you enter. Using tax software can really help prevent these basic errors. Another common mistake is choosing the wrong filing status. For example, if you're unmarried but paying for more than half the upkeep of a home for a qualifying person, you might be able to file as head of household, which usually results in a lower tax bill than filing as single. Forgetting to report all your income is another big one. This includes income from side hustles, freelance work, or the gig economy. If you received a Form 1099 NEC or 1099K, the IRS knows about that income, so you need to report it. Even if you didn't get a form because you earned less than the reporting threshold, you're still legally required to report all your earnings. Failing to do so can lead to penalties and interest down the line. Life changes have a huge impact on your taxes, so let's cover a few common scenarios. Did you get married last year? Congratulations! Now you have a choice. File as married filing jointly or married filing separately. For most couples, filing jointly results in a lower tax bill. Did you have a baby? That's amazing. You'll be able to claim the child tax credit and potentially other dependent-related benefits. What if you started a new job or a side hustle? If you're an employee, you probably filled out a W-4. It's a good idea to review it annually to make sure you're having the right amount of tax withheld. If you're self-employed, you're responsible for paying your own taxes, including self-employment tax. It's wise to set aside about 25 to 30% of your income for taxes and make quarterly estimated tax payments to the IRS to avoid a huge bill and penalties at tax time. Okay, feeling a bit overwhelmed? Let's simplify it. Here is your step-by-step guide to get ready for tax season. Step 1. Gather your documents. This is the most important part. You'll need all your income forms, like W-2 South from your employers, and any 1099 forms from side gigs or investments. Also, gather records of any potential deductions or credits, like receipts for charitable donations, records of medical expenses, student loan interest statements, and childcare costs. Create a dedicated folder, either physical or digital, to keep everything in one place. Step 2. Choose your filing method. You have a few options. You can use tax software like TurboTax or H&R Block, which guides you through the process with a question and answer format. If your adjusted gross income is below a certain threshold, you can use the IRS Free File program to file your federal taxes for free. Another option is to hire a tax professional, like a CPA or an enrolled agent. This is a great choice if your tax situation is complex, if you're self-employed, or if you just want the peace of mind that it's being done right. Step 3. Review your information carefully. Before you hit that submit button, go through everything one last time. Does your name and social security number match your card exactly? Are all your income sources accounted for? Did you claim all the credits and deductions you're eligible for? A final review can save you from a lot of headaches later. Step 4. File on time and choose your refund method. The tax deadline is typically April 15th, unless it falls on a weekend or holiday. If you need more time, you can file for an extension, which gives you until October 15th to file your return. But remember, an extension to file is not an extension to pay. You still need to estimate and pay any taxes you owe by the April deadline to avoid penalties. When you file, you'll be asked how you want to receive your refund. The fastest and safest way is through direct deposit into your bank account. Taxes can definitely feel complicated, but by breaking it down into these manageable steps, you can tackle them with confidence. The key is to stay organized, be aware of the changes, and give yourself plenty of time. Remember, the goal is to pay what you owe, but not a penny more. Taking the time to understand your tax situation is an investment in your financial well-being. I hope this detailed breakdown has been helpful and makes you feel more prepared for the upcoming tax season. If you have any questions, feel free to drop them in the comments below, and I'll do my best to point you in the right direction. Thanks so much for watching. If you found this video valuable, please give it a thumbs up and subscribe for more financial tips. I'll see you in the next one.